Coming to you live from downtown Detroit, this is Benzinga's PreMarket Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything that you need to start your trading day.
Good morning, traders and investors. Welcome to this Tuesday, March 7th edition of Benzinga's PreMarket Prep. I'm Spencer Israel, here with Joel Elconin and Dennis Dick. Got a good show for you folks today. Couple earnings to discuss. We had Dick's, we had Juniper, we had Michael's. A bit of M&A news this morning, as well as HPE is buying on Nimble Storage, and we'll also maybe discuss the follow-through yesterday in that Snapchat move that we discussed on yesterday's show. We have two guests for you. First is at 8:35. That's Nick Shaheen. He's our options guru. And then at 9, we're going to be joined by Mike Vien. He's the CEO of Vetter. They do crowdsourced analyst ratings, which some of you might find interesting, considering we talk about them a lot on the show. Joel, how are we doing on the S&Ps this morning?
Quiet session here. Pre-market high matches our closing price at $75.50. That's key to the upside. Holding in at $70.50, only one number to worry about on the downside, 67 even, that's Monday's low. Crude in the trading range, maybe we could just roll a tape here, 51 to 55. Trading range here for the better part of the year. Gold and silver in the red again here, gold inching towards 1,200, silver down 7 cents at 17.70. Dennis, how you doing on this Tuesday morning?
Not too bad. Just looking at the market. Kind of quiet here this morning, but we were trying to come up on the pre-market show something to say for Snap. Bob Wire might have it there. Snap, crackle, and drop.
Yeah, Spencer was rolling yesterday. I did snap back to reality. What were your couple of your other ones, Spencer?
Snap. What was it? Like snap your fingers and snap out of it. Snap out of it was, but snap.
There was one you had if it was going up, and I said that's only for a rally.
Snap it up, but I like what Bob Wire said. Snap, crackle,
and
That's
drop.
Good.
Bob Wire is the winner, I think, here this morning. So obviously Snap. So we dogged it pretty hard yesterday. We dogged it the day before. Egg on our face the day before because it went up. But we're looking better 2 days later for dogging this thing, Joel. Down another 3% here in the pre-market. And is the Snap bubble over?
Can I give you the technicals real quick?
Yeah. Talk to me. I want to know where
major support here at 22.75. That's the all-time low. Not being facetious here. I still keep an eye on that closing price from the first day. That's going to be good resistance. I think 24.48. Nice range yesterday. We talk about opens, right? That thing opened higher, went another 8 cents. So if you're using the opening print as a key indicator, you might have caught a short going through that off the higher open. I mean, $17, do you think it's going to get down to where it was originally priced at?
I don't like the valuation at all here, but I'm not going to speculate on where this thing's going. I'm just hands off on it. It's too high, but funny things can happen, and this market is irrational there. Obviously, we saw it run to $29 there right after the IPO 2 days or the next day. Ridiculousness. Now a little bit snap back to reality, but 23.77, 23.10 here this morning. I'm still hands off. I don't like it. I'd be a seller, Pops, just because I don't like it from the valuation, but I'm hands off. I'm not trading it.
And Ace is mentioning GoPro here yesterday, so let's just cover real quickly GoPro and VRX.
They are in sympathy plays. I just want to make that clear. GoPro and Snapchat are not like sympathy.
They're not related?
No.
Yeah, they're cameras.
No, they're not.
Right, Dennis?
That's not. Isn't Snap a camera?
No, not. Okay.
Yeah, I see it all the time. Snap on your iPhone. Wow. It's your iPhone camera. It's a little puppy dog ears.
All right. Just the only point I want to make on this is what happens when a stock, takes out an all-time low. You had an all-time low in GoPro at 854. You had the double analyst gang up on Friday. You had Citigroup initiating it a sell. Goldman Sachs piled on Monday. You took out 854, boom, under $8. So that will now be resistance. And now I know this is not related, but VRX hung to that $13 level for so long, and then it took it out on Friday, $12.90, gave the buyers one last chance, and then it took it out yesterday. Now 13 is going to be your major.
That's a new 52-week low for Valiant too, right?
52
Joel?
week? You're talking 6-year low here.
6-year low.
Yeah.
Well, I already said when stocks are making new lows, it's time to go. And I don't want to own any stock that's making new lows and breaking down here. I mean, VRX now, I might come in here short. 4 days ago, this was 16.5, so probably the definition of chasing. But these things, these pesky trends, it's 5 days in a row. It's been down here now. The VRX chart is ugly. GoPro, obviously, the couple of downgrades to sell from Citi and Goldman beat it up here. I mean, can I have a snapback rally? Sure can, but I'm just not betting on that. And I still think it's a value trap, just like we've been saying. You can look and say the cash, but now they're burning cash here as well. I'm not a fan.
All right, let's get to some morning movers.
All right, there's a couple earnings reports here. So jumping over, if you want your big mover of the day, kicking myself on this one here too. Meet me. I actually bought this thing right off the earnings report. It sat there for a second. I was like, this is a good report. I bought some stock at 5.10, and the scalper blood me. I was long gone before 6:39 here this morning. This is impressive. Spencer, give us the numbers here on MEET.
That's a little under the estimate. Fiscal year sales, 100 to 105 million. That's right in line.
This is your big mover of the day here, though. I believe it's number 1 on my leaderboard. I'll just check it again. Yes. Actually, no, Nimble, because Nimble got taken over, so it's number 1. But it is it just fell to number 3, actually. We got MLNK, which is a little $1 stock. It's up 25%. But this up 25.44%. MEET. So number 3 on my leaderboard here right now. Joel, technically break this thing down.
All right, big pop, 670. We backed off to the 635 area. So you know me, I'm gonna like that 670, that pre-market high for continued follow through. Haven't been in the $6 handle in a long time. Back in September, we hit 647. Above that, 811. But man, maybe some paper to chew through at the even number of 7. Trading up on a little bit of volume here. Pre-market high is important. 670 coming back on the downside. Minor support is 620. That's been holding since you hit that 670 high.
Couple retailers reporting here this morning. Dick's Sporting Goods, DKS. It got the pop, and now it's getting the drop. Spencer, what did they have to say?
DKS Q4 adjusted EPS $1.32 versus $1.30, so it's a nice beat. Sales $2.5 billion versus $2.47 billion, so they beat that too. Comps are up 5%. They see their Q1 adjusted EPS at 50 to 55 cents. The estimate was 61 cents, so they missed that number, and they see comps up around 3 to 4%. As far as the fiscal year EPS goes, that is a little bit lower, or on the low end of the estimate range for that.
The guidance hitting this just a little bit this morning, and we did get a drop, didn't we? Didn't we, Joel? I thought this thing I saw trading higher here just when I came in early this morning, and now obviously it's trading down over almost $2 here. So the pop and the drop.
Yeah, big range here on the bar when the earnings came out. You hit 53.25 on the same bracket. You hit 48.96 here. Now hanging out at the $51 level. Won't see that closing price, I don't think, at 52.61. That's buffeted right there by the high from Monday, 52.89. Maybe keep it a nice even number like 50 in mind here. We're $1.50 that. Under 50, 49.71. That's your 4-day low.
Well, all kinds of support down there, 48. So whoever was going fishing for the bottom there in the 48 handle, good job, because we bounced out of there. We're obviously back in the 51s already, but multiple lows there in the 48. So that's where I think your support comes in here for Dick's Sporting Goods. Also reporting the scrapbook store, Michaels, M-I-K, and that's getting a lift here in the pre-market. Stock trading up 6%. Spencer, M-I-K.
I think this is the stock that you hate, or the company that you hate the most.
I hate this stock. Okay, I got another Michaels. So anyways, I don't know why. There was something I can't remember the reason actually behind this, but I was outside in a plaza, and I actually needed a pair of scissors. I needed to cut some tag off or something. And I'm like, I don't know why, but Michaels was there. So I go into Michaels, and I'm like, okay, I'll go buy a pair of scissors. It'd probably be $1. I go to Michaels to buy a pair of scissors. I can't find a pair of scissors for under $16. Like, they have all kinds of scissors. I got like a scissors row, $30 scissors, $40 scissors. I'm like, your cheapest pair of scissors is $16? So, anyways, I was tempted to go ask to borrow a pair of scissors then, but I didn't even bother doing that. So I forgot about the thing I wanted to cut. I can't remember what it was, but I need to cut something. And $16 scissors, no, I'm nothing to do with that store.
And I have a story like when Lisa asked me, "Oh, could you go get this black marker at Michael's for me?"
That's
and I
gotta
write
be
down
like-
exactly what it is, and I go there, and there are 48 different kinds of black markers. So,
and
then-
they're $10 each.
and then they also have like all this stuff that you put. Don't they have stuff you put in plants and stuff, fake looking stuff, and grease and stuff?
You
like
know
that?
what though? Their margins on this stuff have to be insane. So I mean, they sell one pair of scissors and they pay their bills for the day.
Right.
Maybe we should have invested in this thing.
Well-
Joel. Just because me and you won't shop there, there's people in the store. People
Yeah.
are buying $10 markers and $16 pairs of scissors.
Yeah, so let's get to what the Q4 earnings were. EPS 95 cents is in line with the estimate. Sales of 1.75 versus 1.76 billion, so a little bit lower, but pretty much in line there for the Q4. As far as Q1 goes, they see EPS 38 cents versus 38 cents to 40 cents. That's in line with the 39-cent estimate, and then the fiscal year EPS is higher. As they see that at 205 to 217, the estimate was $2.04. So they beat. They're coming in with some higher than expected estimate for the fiscal year 17 EPS.
You know that 22 level, Joel? That's the level I'm looking at. I think you probably look at that thing too. I'm actually just running to the book to see if there's anything jumping out. I mean, there's not, but that's where we got up to back in January. Had multiple highs right around 22. We kind of snuck our head just on a couple 100 shares above that. Actually, 400 shares traded 22 and a quarter, but I think 22 might come into play as resistance.
You took the words right out of my mouth. Pre-market high 22 and a quarter. January 20th high 22.17. We've backed off. Sellers may even step ahead of that at 22. So nice level. We agree on the upside on this one.
Here's their other favorite store, Joel. Pier 1 Imports, PIR, the Wicker Basket Company. Trading up a little bit here in the pre-market. They came out with their comps, and they're closing 100 stores. So comps, do you have the comps there, Spencer? I think they were okay.
Yes. Q4 sales were down about 2.5%. It was 2.6%.
Well, that's okay for Pier 1.
Okay, 2.6% year over year. Comps, so that was Q4 sales. Comps up around 0.2%. And then the guidance, they actually raised their Q4 adjusted EPS outlook. It was 28 cents to 32 cents. They upped that by 2 cents. So now it's 2 cents on each end of the range. So now it's, or 4 cents, excuse me. So now it's 32 cents to 34 cents. So they upped the guidance by 4 cents on the low end of the range, and they also raised their EPS outlook for the entire year.
All right, I think the same people that shop at Michael's are the same people that shop at Pier 1 Imports. Don't you think that, Joel?
I think it's wicker chairs and incense is what they primarily
Yeah, it was the
sell.
same type. They don't mind paying up. Me and you, like, I'm the discount store guy. I'm like the Big Lots guy. You know, I'm never gonna go and buy, you know, some expensive thing from Pier 1 Imports or some, you know, $20 scissors from Michael's. But I just think it's that crafty person. Doesn't Pier 1 Imports kind of fit into that whole crafty? I mean, they don't sell crafts, but it feels crafty when I've been in that store.
Yeah, Bob Wire said it's a store for creative people. We are not creative.
Yeah, both of these stores. They're for creative people.
650
I'm not creative. I actually failed grade 3 art. Believe it or not.
You want to hear? You want to hear my sixth grade art teacher story?
Did you fail grade 6 art?
I was.
Because that would be worse than me failing grade 3 art.
Well, I was so mad at the teacher that my parents used to give me, you know, Christmas gifts to give out. You know, I can't remember what it was to all the teachers, and I never gave it to her. I kept it in my locker, then I threw it out at the end of the year. Mrs. Kemming, I hope she's not listening.
I remember grade 3 art. I think it was grade 3, and there was a couple projects, and I guess my artwork was really bad. And my mom was so mad that I got like an F in art. She went in and talked to the teacher, and the teacher said, "Have you seen his artwork?" And she showed a couple of the projects, and my mom just left and hung her head. Failed the kid in grade 3. Not creative at all. So that's why maybe I don't like Pier 1 Imports and Michael's.
650 support, 7 resistance. Enough on Pier 1 Imports.
All right, jumping over here to a couple other stocks. So we're moving away from the earnings parade here for a second. Moving even away from the ratings trade. We'll get to the ratings here in a second, but I want to talk CRM. Salesforce.com and IBM, a strategic partnership here.
I guess that was
Did I take it all? Was there anything else to say
I guess
about
that was a cue for me, but I'm not sure what else there was to say.
That's what it
So
is.
that's what it is.
I just said IBM and Salesforce.com are doing something. Spencer, what are they doing?
Well, so the one thing I'll add is the Salesforce CEO Mark Benioff was on CNBC yesterday. He said he doesn't see any big acquisitions in the short term. I don't know. Take that with a grain of salt, though.
CRM got a nice pop on this last night. It was trading over $85, and I was wanting to short this, but I always remember what you say: try not to short the stock when it's going up, wait till it starts going down. And that's what I did. And then it started going back down through 85, and then I'm trying to get short 85, and I couldn't do it. And it's trading 84.5. I'm like, come on back up, come on back up. No, now it's trading down the 84 handle. So here we are, CRM getting a nice lift because they are partnering up with IBM.
85.20. That's your pre-market high. That takes out the former all-time high in CRM at 84.48, so still relevant numbers on the upside. IBM, this stock still holding up here in the 180 level, trading up 22 cents. For IBM, just keep an eye if you get into that 182 handle. That's been pesky here for the issue. Popped over 182 3 times over the last month, and then we stopped at 182 right on the nose, and I believe that was on Thursday.
And then we got a merger here this morning. Spencer, give us the details. I didn't take it away from you there.
This is HPE acquiring Nimble Storage for $12.50 a share in cash for a net purchase price of about $1 billion at the close.
Risk arbs aren't playing games with this one, Joel. 12.48 to 12.49. They've got this thing priced, so putting the 2-cent risk that the deal doesn't go through, not a lot, but 12.48, 12.49. It is heavy bid, heavy offer. I'm telling you, hundreds of thousands of shares bid at 12.48, hundreds of thousands of shares offered at 12.49. Risk arbs say this deal is going through, and you can have 2 cents if you decide to buy it at 12.48 and wait for the 12.50 takeover. That's not enough for me.
Yeah, it might not even be worth the cost to carry to do that. Let's just take a look at HPE here. And that stock had just gotten tarred and feathered after earnings. So coming back at I like the technical setup here. 4 highs in the 23 handle. We'll see if the street gives approval to this deal. The highest we've been since the earnings washout to 22 is 23.27. Not quite there yet. Also, multiple closes at the 23 area here. Gap to fill up to 24.50.
Real small deal for HPE. It's not even moving. It's only traded 100 shares, so it doesn't look like HPE shareholders really care.
All right. What else?
Yeah, okay, so jumping back over to the ratings parade, was there any notable ones you want to talk about there, Spencer? Ratings land?
I'll look again right now. I looked when I first got in, and I didn't see anything that jumped out to me. But let me give it a second read through real quick. I mean, still, wow, no, nothing.
Yeah, there's a lot of little mid caps there. You're looking at a couple dozen ratings, but nothing that's jumping out to me here either.
I see Morgan Stanley upgrading Hyatt, but that's the
slow day in ratings land. The analysts were all sleeping. You know what? I'm starting to determine. I don't think there's never a lot of ratings changes that happen on a Monday, and there's never a lot of ratings changes that happen on a Friday. You think those analysts just like that 3-day work week in the middle, Tuesday, Wednesday, Thursday? I mean, it's Tuesday morning, but a lot of Tuesday mornings coverage is from Monday night. Do you think analysts are only working 3 days, Joel?
I don't know. Next time we have one on, we'll have to ask
You always
them.
see like Thursday. Thursday's like their big day. You see a lot of ratings coming in. Even on Friday morning, you might see from the Thursday night, because I think a lot of them like to get all their ratings and all their analysis done for Friday so they can have the 3-day weekend. Maybe I should become an analyst.
And we'll only work 3 days?
Yeah.
Okay.
I like those hours. I like the 3-day week.
Yeah, but your ratings are, they can't change intraday. You're gonna have to
Yeah, if I was an analyst, I'd be upgrading and downgrading the same stock in the same day. What do you mean? I don't like it anymore. I don't like it with this. My time horizon a little bit shorter probably than the other analysts. So, good point there. Dish, D-I-S-H, going into the S&P 500 here, Joel. Stock trading up $3.50 here in the pre-market. D-I-S-H, technically speaking, what are you thinking?
Nice move up here. Is that a new all-time high here for Dish? Let's take a look. I see 64.74.
It's a 52-week high.
52.
We were up over $80 back in 2014 and 2015, though.
All right, why don't you just explain the dynamics of that real quick? What fund managers are going to have to do now that the stock? When's the drop down? When's
I didn't see the date. Spencer, do you see the actual date that it's going to go in? Have they announced that yet? Sometimes they announce the edition, and then later they announce when the actual date is. So I'm not sure if they've given us the date yet.
I don't see it. I don't know. But first of all, we should say that they're replacing Linear Tech, right? They're replacing LLTC. But no, I don't have a date for you.
Yeah, and LLTC is that just coming out, or is that getting taken over? Because a lot of times you see the replacement coming because some company's getting taken over. I'm not sure if that is or not, but
No,
LLTC
I think they're just
it's
coming
not
out.
trading.
not moving?
I think they're just
No,
coming
and
out.
often if it's just coming out, you would see it get hit. That's why I wonder if there's something else happening there. I don't follow linear technology, so not sure if there was something else happening there. But basically, what has to happen is, your managers who are mimicking the S&P 500 need to buy Dish if it's going in, and that's why you see the immediate pop. And there is an algorithm, I'll tell you, that runs off this, and I can always tell after hours when something's going in the S&P 500 because they bid for like 50,000 shares way up. It bids for a ridiculous amount of shares, up like 2-3%. And when you see that big, huge buyer come in after hours, something got added to the S&P 500 because it's really got a big footprint. So you can really see, from looking at your quotes, it hits my filter because I've got scanners that are running after hours for movers, and boom, and then I bring those up. I was like, I see a huge bid. And it's always the same huge bid, like it looks similar. So that's why I was like, oh, that's got to be an S&P 500 ad. And then sure enough, you see it, and it's an ad to the S&P 500.
And you see that before the news actually hits.
No, it's about the same time.
Okay.
Because I'm a human being, so I can't look and read and process and actually look at the quote at the same time. I always, for the most part, the way I'm running is usually I'm looking, and running scanners for the movers. I see the thing moving, and I just say, what's the news? It's kind of, if you were just staring at news all day, and I do stare at news a lot, but if you're just staring and trying to read news all day, I think you get a headache just trying to read, what's happening with news. So I typically run the scans for the stock, see the stock moving, and I'm like, what's going on? And then, you see and you look over there. It's almost like the exact same second. I mean, literally, it's an algorithm. So the news breaks, and it's in the same, split second that it's bid up. So, that's totally not human, obviously, because, you can't process, the news that fast and then obviously send a bid to the market that quickly unless you're just Superman. So it's an algorithm, and it's always bidding the same way. And it's called the S&P 500 algo.
You have Dish, though, right? The Dish Network?
No, I don't.
You don't?
Dish is only available in the U.S.
Oh.
A few people in the chat noting that they're moving in next Monday, is what.
It is coming in next Monday.
Yes.
Okay. So there you go, March 13th. It comes in there, but always gets bid up. Usually when you go in the S&P 500, that's about what it's worth. Usually about 4 or 5%. So I'd say this is probably priced where it's probably going to be.
I'm upgrading Comcast on Friday. I got $90 knocked off my monthly bill. I guess that's not good for the stock, but it's good for
Why
me.
did they do that?
I don't know. They just I called.
Like you?
I just called to complain, and they're like, "Oh, you've been a customer for like 32 years here or something. We got to do something for you." And then the lady, I think I knocked out a couple channels.
32 years.
I
That's
don't
gonna be
know.
one of the
I've
best.
had
That's
Comcast
impressive.
for a long time, so but 37 seems to be supporting that. Kind of trade to range 37 to 38 in Comcast.
Go ahead.
I was gonna bring up Shaq because somebody in the chat.
Yeah, go.
Okay, so no, I was just gonna say that someone in the chat brought up Shaq, so I wanted to do a quick look at that. We had Andrew Horwitz has been on the show before. Last week he initiated a short position in the stock, but that's all.
See,
I
I
got.
thought this was tanking because you said, yesterday on the show that you didn't think the Shake Shack burger was that great.
It was overpriced and not worth. Yeah, it was. I mean, it was.
And then the stock went straight down after you said that.
I didn't
think
even
it's
know.
a little bit the Spencer Israel effect on that one.
Is he the Vice guy, Andrew Horowitz?
No, that's no. To answer your question, no, it's not.
We're all over the place for it. Shaq, SHAK, give us the technicals. We've had a 2-day
Man.
fall from 36 to 32 here. Looks like you can kind of find support coming up here, no?
30.90. I mean, if that's what you want to use as a bullion.
It's got to hold 32. I would
Yeah.
say like $30. So, that was the low. 30 is the all-time low on this, isn't it?
Yeah, in January, man, this thing got over $95 and then came down to 30 even. So I'm looking at 30 even as a potential level. Also, 30.90 was your low back in October last year. So trading up 52 cents in the pre-market. So is that just an odd lot or something trading?
Odd lot, yeah.
Yeah.
8 shares traded at 32.71, so it's not trading up there at all.
Yeah, Shaq looks to be in a little bit of trouble. Boy, since earnings down from 36 to 32, so
Expensive stock, expensive burger. I haven't ate there yet, though, so I shouldn't give my analysis of the company here yet because I haven't ate there. I'm going to come over and get one of those lunches from you, and you're taking me to Shake Shack.
I
Are you
did.
still lined up, though, across the street to get in there?
Yeah, I did get the one lunch back on Friday. I forgot to mention on the show. I said,
Okay, I got to talk to you about this one, too, because this is, we need to roll the tape on this. So the bet on I think this was Friday morning, was I said the market would close green. And you went and the S&P futures actually closed red by 1 tick, right?
a couple, yeah, maybe 2.
And the SPY closed green. So I don't know. We need to hear what the tape says. You said the bet was made on the S&P futures. I say it was made on the market, and I'm arguing all the day. I even had one of my Twitter followers who was congratulating me on the bet. Let me go see who that was
because
he listened to the show. Yeah, one of my Twitter, Johnny Lechner, he's an actor out actually in California. He says, "Congrats on today's lunch bet. You even gave up the edge. Markets ended green just as you predicted." I was like, "Yeah, they did end green. SPY ended green." Joel gets me on the technicality of the S&P futures going a tick red.
I'll listen to the tape today.
Yeah, we need to find. So I don't know if I've lost that lunch bet yet. If it was made on the overall market, I think the market was still green.
Ethan,
S&P futures did close a tick red.
I don't even look at the spider. It was definitely the S&Ps, man.
Everybody uses the spider now. You don't even need S&P futures anymore. I don't pay for futures quotes anymore because they're too expensive. SPY works for you. If you're trading between 4 and 8, you got a tight market in the SPY. There's high frequency traders helping you out there. So there's the one thing they do good. They give you the nice tight market in the SPY, which will let you know what the market's doing. So I use the SPY for my market indicator now. I don't even need the S&P futures.
All right.
Unless it's midnight, then I need to look at the S&P.
No, it was
the
S&P. We'll roll the tape, Spencer. That's going to be
all right.
the show.
Spencer's going to find that out. We'll find out tomorrow if I did in fact lose a lunch there to Joel. But in any regard, you still owe me, I think, 2. So I'm coming over to get a Shake Shack burger. I'm coming over to collect, Joel.
Okay. All right. Then now we had another stock in the chat here. THO, Thor Industries. We got some news on that today, some earnings.
Well, they had earnings after the bell, yeah. Q2 EPS, $1.23, that beat by a penny. Sales of $1.59 billion versus $1.51, so they beat that too.
I don't know what to say about this one. This is coming off, a nice run here, so it might just be the fact that it runs so far up ahead of the earnings here, and it just, this is just profit taking.
Yeah, popped up to 116 and change on the initial print, 1645. That took out the former all-time high. Now you're traded down 367, so I'll use the lower end of Monday's range as resistance. That's 113.50. I'm sure get back into that range. Might be some sellers here after a really good run in the issue.
Dr. J in the chat wants to know about WFT, up 17% here this morning, and that is because they are getting a new CEO, and this new CEO, I believe, is coming from Halliburton. Spencer, who's the new CEO?
Yep, it's the Halliburton CFO will be the WFT president, CEO, and director, and his name is Mark McCollum. And
they like that fact this morning. Obviously, it's been consolidating for a long period of time. I mean, this is a stock that has been beat up. 2014, the stock was almost $25. A little rounding bottom here now, though. It's been really consolidating. Now you get a breakout here on the good news. If we were to pull back into the 6 area, I think that's where I'd get interested. I'm probably not going to see that today. But I don't know if I'm chasing it up 17% here. Sometimes let the dust settle a little bit, and sometimes it'll give you a shot from where it came from. That might be where I'm more interested here as opposed to chasing this thing up 17%.
Yeah, you know how I feel about a new CEO coming in, and automatically the company is worth, $1 more.
17% more.
Yeah.
Nothing was worse than that CSX one, though. I mean, and I think did we get some closure on this finally, just talking CSX? Because remember there was rumors that they were going to bring in, whoever, and maybe take the thing private. And CSX popped that next day from like 35 to 45. I was like, oh, this guy's a hero. But there was some more. Was there closure on this, I think, actually last night?
Yeah, there actually was closure yesterday. They confirmed that Hunter Harrison is the new CEO, and they named 5 new directors to the board. And Hunter Harrison was, if memory serves, he was the guy that they were trying to get in, right? Is that They were trying.
Yeah.
Yeah.
He was the guy that trying to get him into the role, and that happened.
Yeah, so you're going 35. That's the big gap up was when this was rumored here. So you can see on the chart, it actually had disappointing earnings, CSX, and then the next day we pop up to over $45, and that was, I'm talking on the 19th of January, and that was, these rumors here, and we've just kind of been going up ever since. So now, I guess as you're getting closer, it's funny, here it is. It's actually down a little bit on the actual news, 49.60. It's now 49.35 as we're talking about it, but. This is a classic buy on rumors, sell on news.
Yeah, Dennis, man, I remember how excited you were that day on your losing trade, remember?
I got the beats on this.
Yeah.
I was like, this is silly. And I started short. And when I was like at 42 and boom, 43, 44. And I was like, you know what? I've got to eat this. It actually pulled back in a little bit. I think I only lost like $1.50 after being down 3 points. And this was after hours. It's very thin. Never let something intraday go against you like that. But I mean, when you're trading something after hours, and things are gapping through dollars, sometimes, you shouldn't be out there trying to provide liquidity to that. And obviously, I'm glad I did because the stock continued to run higher. I think I ended up covering around 43 and obviously went to 50. So it was a good losing trade. You can actually have good losing trades.
Dennis, what's your minimum value to trade a stock or an ETF? I don't know. I've known you to dance in some.
What do you mean minimum value?
Minimum volume. Minimum volume.
Oh, I've traded some really thin stuff. I used to trade, and obviously, just over the years, it's kind of changed. Market structure's changed. I don't trade a lot of thin stocks anymore. I've kind of evolved. But back in the day when I was like first, I would trade stuff like you were saying, like by appointment only. Like sometimes stocks only traded a couple times a day. I've had, I used to have stocks where you take 2 or 3 days to get out of it just because there was no volume. But usually I'm in all of the S&P 500 stocks now that you can get out with relative ease.
Didn't you used to mess around in the Washington Post when that was like a
Oh yeah, I'd be in the $900 stocks, and I was in like a White Mountain, I think it was, the 300, and MKL was another one. I like those high price stocks because you came in and and you make 10 points on something in a hurry because it's a $300 stock, and we don't, as prop traders, we're not really caring about percentage basis. We're just looking at the money that's coming in, and if the spread, and that was when I was making, you're kind of almost making markets a little bit too. You're trying to make the spread, so you're working the spread a little bit. It's hard to do that now. I mean, it's the markets have evolved so much. You have off-exchange trading, you have high-frequency trading. And we're not going to get into market structure talk here, but it's just evolved, and it's much more difficult to be playing the spread now here in short-term traders because you're competing with the best algorithms in the world in that game. So I've evolved, and I don't play the market-making game anymore. I don't, and that's what you did on the floor too, Joel. Basically, playing the market-making game, and you just can't do it anymore. As a human being, it's just very difficult.
Yeah, those. I remember you getting stuck for like a few days or something. Just waiting.
Oh yeah.
Calling the specialist, asking them to make a trade.
Make me a market. There's no bids. There's no bids. There's no offers. I'm like, how do I get out of this? I can remember getting stuck in a lot of thin stuff back in the day.
How about for Wave Trader, new to the chat, asking about Navistar earnings? Did we have them out? Man,
yeah, we did. NAV was one we NAV earnings, Spencer.
Yep, they had Q1 EPS of a 76-cent loss versus a 45-cent loss estimate. Sales of 1.66 bill versus 1.70. So they missed both those EPS, not good. They did reiterate their guidance, however, for the fiscal year. So saving grace there.
Is it trading down in any volume here? Let me take a quick.
350 shares, so I would say that is a no. But the one thing I will say is you can look at volume, and then you need to always look at, what the market, now bring up your montage, or you could call it your level 2 quotes. I call it a montage screen still. But 25.52, it is offered there. And another offer at 25.55, another offer at 25.61. Just 100, 100, 100. But nobody lifting that offer. And when nobody's lifting the offer, it's telling you it probably wants to try to go lower. Best bid is down at 25.01. So it looks like there's somebody that's willing to say, okay, 25 I think is the floor on this. But somebody else is saying I think it's going to go lower than 25.50. So it does look like it is going to take out the 26 support. You could say, from yesterday at 25.85 and then going back to the 23rd of February, 25.73. It looks like we're going to open below that, which starts to open up. And then you got a little bit of air. Like I would say even air through 25. I mean, 25 psychological level, but really I don't see any major support until 24.
Yeah, I mean, what jumps out at you? You're looking at this chart, even before the earnings, even before the news, you're thinking, man, 26 looks huge. Just settled just above it, so downward pressure already. I think if they get this thing rocking and rolling, I wouldn't stick a bid out until the 24 handle. I see a couple lows just under 24. A lot of air between 26, 24 here in Navistar. All right, we're keeping Nick Shaheen waiting. We know he doesn't like that.
You know what? Let's just bring him on live
Just
right
bring
now.
Nick on
Let's
live?
just bring him on
Okay.
live.
All
Yeah.
right, he's pretty good live. Is it live or is it Memorex?
Good morning.
Good morning, Nick. How you doing on this Tuesday morning?
Doing fantastic. How about you?
We're doing good here. So I know you listen to the show and cherry pick on some of the things here. Do you wanna talk about the Shake Shack chart at all, or what's your preference?
Shake Shack is kind of like a pick in the bottom, and you're gonna end up just whether it bounces at that bottom or not. So not really much to say there. But there are a lot of things like in the macro that we probably should talk about. Like
Yeah, we haven't talked much macro today. Let's jump into that.
Well, we can start with the macro, but then what does it mean to all the winners that you've had and to all the potential movers? And like all the NVIDIAs and the AMDs, all the high flyers, what do you do with them? Do you book profits, let them run, and all of that?
Let's jump into your overall picture here. A struggle. It's been a struggle on the short side. If you were fighting, you're fighting the tape. Every time we pull back, we seem to get bought right back up here. I mean, we had a decent down day there. I think it was on Friday, but
I'll post. Can I post them right now? Are we live?
yeah.
Oh, okay, good. All right, so here's the ES, and it's basically my interpretation of what's going on. I've had a battle zone going on right now, and we're pinging between the two edges of it at the upper end and the lower end. The lower end is about the 73, the 23, 73, 70 area, and if we lose that, we have like a minus 8 point drop that we could expect. It's not a forecast, but these are the levels I'm looking at. Overall, the rally still has room to go. I'm not calling for the whole room to be priced in, but it is like I don't short it for shorting's sake. What I do is if I had winners and some high flyers, a perfect example like PANW, and all the AMDs and the NVIDIAs, everybody gets on one side of the bus and they forget to get off at the right stop. And here's the tricky part. There is no right stop. But if I have profits and things are iffy in both directions, I would book them, even if I'm leaving money on the table. So, perfect example, if you got on board the NVIDIA late and you forgot to get off because everybody's talking, oh, it's going to the moon, then you're caught buying somebody else's profit. So be careful as to how long you stay. Don't overstay your welcome in a winning trade. Let's put it that way. I left money on the table. We talked here, I think, about Netflix, how I saw a breakdown coming, and it played out, but I got out early, and sure enough, a day later, boom, it gets a good note, and it was up 2% on a down market day. So even if you pick it right, it may move against you if you overstay your welcome in a winning trade. So book profits early, and if you see losses, get out. Some people cannot take early profits, cannot book a little loss. They both end up in disaster.
All right, Nick, I'm taking a look here at your S&P chart. First question is here, the arcs. I mean, is that just measuring the former moves? Is that where you came up with the arc formation there?
Yeah, that is just a way to say, okay, here's how much we moved last time, and the arcs are all equal. I just copy and paste. And it's just coincidental, or this is what the markets are willing to do. It's just to say, okay, well, how far can it go? Well, this is how far it went last time. So don't short it just because it's gone so far. There's one below it that you can't see it. It's off of the February bottom, with the oil and the Jamie bottom, whatever they called it. So Jamie Dimon, yeah. So there is room technically to the 2430-ish eyeball. That doesn't mean we're going there. But if I'm short, I have to make room for that. So if I sold some credit call spreads with this short position via options, I have to make sure to be higher than that or defend it So if my trade is out in April or May or even longer, then shorter term, I'd like to defend that with some debit spreads ahead of it, cheaper, like sacrifice calls. So if markets go against you, then you stop the bleeding as opposed to accumulating losses. The charts, you can draw them any which way you want. You just have to overlay what you think markets are doing. And these days, they're kind of like testing how good is the support. Like every day, overnight, we retest the lower zones. It's kind of like stretching to see if they can fall and how far they can fall. But it doesn't mean we can't go another spike higher.
Nick had a nice chat yesterday with Stan Bokov, and he runs TradingView, and I see you make use of it. How long have you been on the platform, and why you like it? Why'd you migrate to it?
A while back, actually, I didn't know that you had them on.
No,
A while back, I found a platform and I was playing around with it. And I was like, man, this is pretty slick and pretty simple to use, pretty intuitive. So I emailed him and got me on it. And I think they benefit because I use it to share all the charts. I used to use Thinkorswim for that, but this is a little more user-friendly. I can, grab the URL and paste it in your chat room. Boom, I'm up and running. I can paste it as a picture. So, and it allows me to take notes, and they have some pretty slick stuff in there. So, I don't get paid to push it, but it's really cool.
Do you use the paid version, or are you using the free version?
I think they gave me the pro version, but the free version is pretty. I would have been okay with the free version if I was a single user. Depends what your ultimate goal is. If you want to chart all kinds of nifty stuff, they might have you pay. But even for a small fee for what it provides me, I would have paid it.
Nick, Rob Hood from the chat wants to know, not about Priceline, but about Expedia. And you know a little bit about this sector here, EXPE. What are you seeing in the technicals?
This one is reverting to the mean, so to speak, right now, but it's at a level where it needs to prove itself. And let me see if I can quickly pop in there. The 121, 122 area was a breakout zone not too long ago, and that would be October. And then it got tested a couple of times and failed the third. And they tried to break out of it again on the way up, and here they are again. So I'll post it in there, and you can see it, hopefully. And, from here, it all depends on what the market's going to do. They don't have any earnings coming up. I don't know of any events, but I don't track it that closely. So if there's no event, technically, they look like they want to burst up, maybe a debit call spread to play that. But if the markets in general, like the macro we were talking about, if that doesn't go up, then they might be retesting the 118 area. So ping pong here because they want to establish a good solid base from which to reattack and break out of that 122. And the goal would be like 124, 125-ish.
Like there's been, and some people saying the trouble with the screen. If you're having trouble seeing the chart, just hit refresh and you should be able to pick it up. But there's been a lot of consolidation here in some of the tech stocks here. I've really been watching Microsoft. I've been watching Cisco. I've been watching Intel here, and Intel's been pulling back a little bit farther. But what do you make of the consolidation here, like in a stock like Microsoft? I mean, we have had a tight trading range here for the better part of a month here now. What are you thinking about this one?
Well, Microsoft came onto my screen, and it's so tight right now, and it hit both areas that I had for it on the short term. So I'm kind of like stuck. What do I do with it? I think everything is market dependent right now. We're kind of like all in a pause looking for that. And the other one that I was worried about is Google. Not worried about from the standpoint of fundamentals, but from the technicals. Higher lows, I want to say lower highs, but not for that long. But anyway, it's coming to a point, and it has a lot. It's in the middle of a range, so I'm not calling for a debacle. But if the markets fall, it's perched to fall as well, just from a technical perspective. And I bet you we can say that about a whole bunch of good names. So yes, you hear the experts on TV and in the news saying not a reason to buy. The rally is continuing, but you have to pick and choose really good entry points with really upside potential and not much downside risk. That's the more important part. So, okay, yes, Google has upside potential, but is this the best ideal place to enter? And then I hear things like, it's so dangerous to get out. I don't know. I don't think I can get back in. It's like, what the heck does that mean? I don't think I can get back in. Of course you can get back in. If the story is good, then it's going to run long. Yes, you can get back in. So if you're worried about something, I'd get out or protect yourself somehow. Buy puts, sell calls against stock you own, do something. Don't just sit and hope things work out.
What's your time horizon? Let's just, talk Nick Shaheen strategies a little bit here too. What do you think your average time horizon is? I know you do a lot of your trades through options. So, yeah. But what do you think your average time horizon is, when you're making a trade?
I don't like, if I'm selling iron condors, couple of weeks is more comfortable than the weeklies. 2-3 weeks out. If I'm selling on the indices, I don't mind. It doesn't make any difference to me. If I sell, 50 contracts at the end of the year and the markets drop overnight, I'm going to make as much as I do if I sell, 10 shorter term or something like that. So it depends on the size of your bucket and what you're trying to do. One thing I don't like is to just try to, Joe, plug your ears. It's try to play a thesis with a very short period of time so you can save money on the premiums. For example, last week, I think I talked about Disney being tight and I favored the downside. Well, it was tight, but it went against me. But because I chose longer dated options, I'm not dead. I can sit on it and see if it plays out my way, and I'll give you a visual to that. So it all depends what you're trying to do and your preference. Some people like to play the weeklies and hit home runs. They spend a few pennies, but then the trade is dead if it moves against you one day. Whereas if you go longer in time, it gives you more an easier way to manage your trade if you have a couple of days of price going against you.
What's your thesis on Disney here?
Well, it was tight. The two white lines on the shorter term, it was kind of higher lows, lower highs, coming to a point. Something had to give. And I looked at the open interest, and I guessed, the lower path was easier than the higher. And then the next day, I forgot what headline came out, and boom, they had a nice couple of days. So they touched the upper end of the breakout target. So in this case, I'm sitting on it to see what happens with the general market. I think if the general market falls, Disney could revisit the 108. Not a forecast. It was a possibility. So about lottery puts, but in April. So I don't mind sitting on them for a couple of days.
In the chat, DCONE wants thoughts on Unilever, UN.
Oh, I shorted it on that pop. I think. Wait, was it a pop or a bottom? Whatever it was. There was good news or something, and the next day I posted it, whatever it was. But a headline name like that, I just don't like to, because there's nothing to be said because I don't know anything about the situation itself, fundamentally speaking. But the day they announced the buyout, it popped like you wouldn't believe. So I bought puts right away. I think I pinged you, Dennis, about that. And the next day, or next 2 days, next day, I think it was, there was news, okay, we're not going to do this. Oh, yes, it was over the weekend, and I read the headline that the deal is not going to happen. They retracted the offer, and it went down. And I booked my profits right away. And then what happened? There is another pop. So don't overstay your welcome in a profitable trade. That's it. But from here, it really depends on, it's an ADR, so it's kind of choppy trading. So it depends on what you know about the trade itself. I don't know anything about Unilever. Technically, it's pretty violent, so I can't really tell you much. It's at the upper end of things. So if I was to guess anything, I'd buy puts longer dated.
Okay, Trump's done it again here. Just to interrupt you here, we've got a Trump tweet here, and it is killing the biotechs and the drug stocks here right now.
No.
Yeah, 3 minutes ago, just as you were talking, I was like, what's going on with the biotechs? I'm seeing them just drop hard here. IBB just dropped a full %. You're seeing all the other biotechs drop. So here's the tweet. Donald Trump just tweeted 3 minutes ago, I'm working on a new system where there will be competition in the drug industry. Pricing for the American people will come way down. And you are seeing the drug stocks get beat on this. We were trading flat on the biotech index when that tweet came out. IBB is now down 1.2%. XBI, if you want to look at that, one's down 1.6%. If you
Okay.
want to go to individuals here, we're seeing, all the biotech stocks. Pfizer, if you want to look at the big drugs, Pfizer just dropped 1.5% here. Merck just dropped a full percent. Lilly, Bristol Myers, all trading down. All your drug stocks getting hit hard here right now, thanks to Trump.
Okay, so here's the thing. I had a note here to talk to you about it today. Okay, and here's my note. It says IBB 300 battle ? So they finally retook the 300 based on a couple of there were a couple of setups. So I guess the answer is no, right? Because Trump just put the kibosh on that one. So yeah, that was important. I just posted a chart. 300 has been a pretty pivotal zone. It's been very strong resistance on the last two runs they've had. And so, you can't headline risk. This is what it is. So if you use longer dated, if you try to sell credit put spreads in the IBB for shorter dated period of time, a headline like this could hurt you really badly. If you go out in time and you do that, then you have a chance at salvaging something.
All right, I was looking. We were going back and forth with you on its IBB. I just couldn't pull the trigger on the 300, and I think it's just maybe I was a little tepid on the market here, so that's why. But now you get it. But if we go back over the Boeing tweet, the General Motors tweet, the Nordstrom tweet. I mean, a lot of times they've been buying opportunities. Not necessarily it's going to happen today, but it has been. He's knocked stuff down, and it has come back.
Yeah, I agree with you, but it depends on the fundamentals. So the IBB case, I mean, he could really hurt their pricing model unless you think he's going to fizzle out with his promise. So, but you have something to shoot for. First, the 280 level has been well consolidated. Then thereafter is the 270, maybe 66-ish area. And then finally, the 250 has held like a solid floor. However, if that's lost, then 220 is fair game. But it hasn't been lost for every test they've had since going back to when they broke out from it, which is probably 2014. So these are the levels to look for. Immediately is 280-ish, but then the 266-ish, and then the 50 solid floor. So if I'm selling credit put spreads in that, I would definitely want to be behind all of those lines, which means I would have to go out in time. But the best time to do that is on a bad day, if you have visibility to a possible stop in the fall.
What about real quick Costco here? Got slammed after earnings. I don't know if you got time to bring up a chart. Holding 166 here. Gap to fill down to 164. Safe to dip your toe in the water here in Costco.
Well, here's the thing about Costco. Fundamentals are good. I shop there all the time. And if I zoom out to the weekly, which is what I just gave you, so each candle is 1 week, technically it has more room for the downside, but this is where you start picking your spots to enter, again, if the macro holds up. So in a world where the market continues to meander and go up, I like Costco in the long term. This might not be the ideal time to catch it, but give it another day or two, or nibble. If you want to do 10 contracts, 20 contracts, or so many shares, just do a third or half or a quarter. So you say, I did something, but I wouldn't go all in right now.
All right, Nick Shaheen, Create Income with Option Spreads. Great information, Nick. We'll speak to you again next Tuesday.
Sure. I'm looking forward to it.
Thanks,
right.
Nick.
Dennis, I know you're going to want to talk about the biotechs here.
It's a mess. I mean, they're getting hit really hard here right now. And I was just looking at my scanners just lighting up with drugs. And I was like, what's going on? Somebody said something. I was like, I bet it was Trump. And you go and you look. And sure enough, the tweet's sitting right there. That's, we know when this happens. I mean, historically, it's been the play to fade the Trump tweets, not immediately, but it seems like when the dust settles and a couple days later, they sometimes get those losses back when he does tweet about a sector here. I think we're still digesting. I don't think this is and a lot of people obviously we're just trading the pre-market here yet, so and wait for the regular session and see what happens to these. But I mean, like a Perigo PRGO just fell 2.5%. It's just my whole scanners are just lit up with biotechs and drug stocks getting beat here pretty hard. IBB is now down over 1.3 and a half, or it's down 4 points now, the IBB. So not surprising, when you have Trump tweet something like that, they're going to get hit.
Wow, and big moves. We'll see the follow through. 8:55. We still got 5 minutes here left in the show. I'm going over the doc here to see if we have covered everything.
Let's look at imbalances. Let's
Okay.
go over here. It would just jump in. You're seeing a lot of weakness actually across the board here. Now, S&P futures I know are flat, but I'm almost challenging whether that's going to stay the same because we're starting to see a lot of stocks getting hit here. The financials were already somewhat weak this morning, although the imbalances aren't actually that bad. I actually see Morgan Stanley with 95,000 share buy imbalance, so going the opposite way there. But Bank of America 96,000 to sell, JP Morgan 32,000 to sell. I'm seeing some of your defensive stocks, even Coca-Cola 51,000 to sell. Johnson & Johnson, it's got obviously, it's a consumer products, but it's got drugs in there too. J&J is getting hit because of the Trump. It's down 70 cents, 61,000 shares to sell now on J&J. You're seeing institutions move in and start to put some orders out there to sell the pharmaceuticals. Obviously, Merck 60,000 to sell, Pfizer 74,000 to sell here. Just a couple of drug stocks jumping out to me. Really, they're kind of small, but more to the downside as well. I don't see a lot of buy imbalances out there, and that's why when I look at the S&P and I see it trading down only 20, the SPY only down 22 cents, it's like, man, I don't know. I think with this, drugs getting hit here, not sure we're gonna be bouncing back here right away.
Yeah, what will be what will be the savior? In these markets, over the past couple of weeks, you hit something, it comes some other sector picks up the
Yeah.
slack. We'll see if that's the case today. One other thing I just wanted to note here was the follow through to the downside in Target and Kohl's. Target with that disastrous report. I believe that was last week when we were out in New York, and just can't find a bottom here. Hit 56 yesterday, low 56.10. Getting any interest here at neither Target or Kohl's?
I mean, the retail stocks are starting to break down here again. Kohl's had a real rough day yesterday, too, taking out its 40 support level. You had Nordstrom here, JWN. That looks like it's kind of hanging on a cliff here now. Macy's is almost back to the $30 area where it started when it was takeover rumors, and that's interesting in itself. If there still is potential for that to be a real estate play there, it gets interesting under 30. But the retail's kind of a mess here too. You're starting to look at, there's a lot of little sectors that are a mess. Like you said, there's always something picking up the slack. So when you got weakness, there's always something else that seems to help out. I mean, I look here this morning. Even this morning, you can say, oh well, we're trading down, but oil's trading up significantly here this morning. So that's going to be a sector that's going to even pick up the slack here today. If you look, Exxon, Chevron, ConocoPhillips are all trading in the green here this morning because oil is higher. So even when you have weakness in a specific sector, like we're going to see probably in the drugs here today, there's always seems to be another sector picking up the slack.
All right, Larry's looking at AER. Looks oversold to him. Big day yesterday. Hit a low of 44 or in the 44 handle. And we covered. Don't have a great feel for this chart yet, Larry. It has been hit. Maybe I see the lower 44 handle. I might get a little more interested. I see a double bottom at the 44.30 area. All right, Spencer. 8:58. I know we got a 9 o'clock guest coming on today, but you want to wrap up this portion of the show and preview tomorrow.
I mean, I'm looking ahead to any notable earnings reports that are after the bell today. I actually don't see a whole lot that jumps out to me as far as the stocks that are due to report today after the bell. So I thought there would be, but actually none that I'm seeing. So anyway, we're at, it's about 9 o'clock now. We're going to take a break for our next guest. That's Mike Vien. He's the CEO of a company called Vetter. They do crowdsourced stock ratings, so you can rate a stock just like any sell-side analyst on the street, and basically it measures your performance, and it's a way to see what the crowd is saying about stock. So we'll be right back with Mike Vien from Vetter. All right, welcome back, traders and investors. This has been Zynga's Pre-Market Prep. I'm Spencer Israel here with Joel Elkan, and we're on the line now with Mike Vienne. He is the CEO of Vetter. They do crowdsourced stock ratings. Mike, how's it going today?
Going great. Thanks, Spencer.
So for people who've never heard of Vetter or the concept of crowdsourced stock ratings, explain exactly what that is.
Sure. Vetter started in 2014. We launched with a mission to connect investors to make better investment decisions. And so Vetter is a community-driven consumer ratings platform. And what we do is we crowdsource star ratings on stocks and ETFs. Specifically, though, Vetter uses the crowd to more accurately predict future stock prices so that people can see what the crowd is thinking and to help them make better decisions. So very much like Yelp and TripAdvisor demonstrated in the restaurant and travel categories, and Glassdoor did for job search, Vetter crowdsources user-generated ratings and reviews for the investment industry. So it's basically just about empowering people to help other people find great ideas and great investment opportunities.
And so the way it works is like anybody, like I could go online right now and sign up, and then I basically can give my rating on a scale of 1 star to 5 stars on a stock, and then you will kind of take all those individual ratings and analyze it. Is that right?
Yeah, so we have some algorithms that do a number of different things. It's actually very simple. When you come on as a user and you register, think of Vetter as a performance tracking tool, and it's super simple. You pick a stock you're interested in, then you pick a price target. You make this prediction with a specific time duration, say 1 month, 3 months, 6 months. And then what we do is we create a star rating. We allocate a star rating 1 through 5 for each prediction, and then we add that to your watch list so you can track it. But then what we also do is not only are we tracking the individual price targets and star ratings, we also aggregate all of that information so that you can see what the crowd's thinking. And the idea behind this, again, is really to try to create something that's actionable, that's forward-looking, that is independent from Wall Street, and being able to surface the best thinking, the best of the crowd.
Do you find that your ratings is there a large deviation between your ratings and the street or sell side analysts, or did you find that that sometimes they're correlated, or sometimes they're not, or it depends on the sector?
Yeah, well, it actually does depend on the sector. It depends on the stock. And as a small company, one of our first priorities is to continue to grow the network. Right, the platform goal is to enable growth in the number of predictions and their accuracy so that we can develop trading patterns, signals, and that can be used to generate alpha, whether you are a discerning independent investor or you're a professional investor. But we definitely see a difference. I can go as far as saying that the research, the analysis that we've done has shown that the crowd is smarter than any other source that we've looked at. And now it's just about increasing the density of the network and the data to continue to improve upon that signal.
And I assume that you're measuring the accuracy of the people on the platform. Are you not? Or I guess
we are. We
are.
are,
okay.
and that's going to be some of the focus for going forward in 2017. 2016, we had a collaboration with the MIT Media Lab, and we did a lot of proprietary research with them to improve our prediction methodologies, and we're trying to put some more emphasis on tracking people's accuracies. So really the ability to track those super forecasters, or what we're calling best in the crowd, but also the aggregate. And so improving the user experience is going to be one of our focuses, to really show multiple vectors and show that the crowd can be more effective in making investment decisions, not only selecting stocks, but knowing specific price target accuracy. We are looking at things like reporting actively on the crowd's performance against actuals, against sell-side analysts, as well as peers within the network.
So, and then is there some sort of I'm wondering do you have anything in place that sort of, I guess, aside from the track record of rewarding someone who maybe makes a call against the grain that turns out to be right? I don't know. Do you have anything? I guess, like, how would I find the quote unquote best calls, or is there any way, or is it more about the crowd as a whole?
Yeah, this is very much about being able to match and personalize those recommendations. So think of it as we call it the investment graph, right? So just like Facebook has the social graph and LinkedIn has the professional graph, think of Vetter as the investment graph of stock market. So being able to check those in real time, those nodes, every node is, if you and I were connected, those would be two different nodes: stocks, companies, all different, digital representation of those types of entities. We are mapping that. And so that way you'll be able to see what you're interested in. If you care about biotech, then we can surface and present to you on our network the most relevant stocks and ETFs and investment content for you specifically. But at the same time, we also want to be able to surface what the crowd's thinking. So it's kind of that blend, and you get to choose. There's a lot of rich functionality on the site to enable you to see what you want to see and how you want to see it. And so, it is very analogous to, ratings and review platforms. You get to search, you get to filter, you get to sort, and we're going to continue to build on that UI and user experience to make it more personalized.
That was going to be my next question. So the major initiative going forward then is just building out the platform that you already have.
Yeah, so last year we had a couple of biggies. We raised our seed round, we closed that, and we actually at the end of the year brought on our first paying client. And then as we think about any more significant upgrades, last year we launched our mobile app, and we need to get more mobile friendly. It's going to be a huge focus for us. We launched our mobile iOS app in addition to the collaboration with MIT. I think we're going to continue to emphasize prediction accuracy. That's what I think we do better than anyone else, specifically when it comes to price targets. We all know that there are some challenges in the industry with sell-side research. The credibility of that has been in question for a very long time. And that's just one of the activities that we can use to crowdsource our community. There's a number of different things when you think of ratings and reviews. Certain things about being able to rate and review investment advisors as well as investment analysts. The ability to have this as one place when you're thinking about searching and discovering new ideas or vetting together, which is really what Vetter stands for, right? Vetting investments together. The ability to just a 360 degrees look at that through surfacing the wisdom of the crowd. So I think you're going to see what you'll see in the coming months in 2017 and beyond is for us to continue to build out the network and continue to add those features that allow us to get, to surface the best in crowd, not only in terms of independent amateur investors and analysts, but also professional investors and buy-side analysts and so on and so forth.
Now, you guys are up for a 2017 Benzinga FinTech Award. You're nominated in the Best Trading Idea Platform, Tool, or App category, so I hope we'll see you at the awards in May. Joel, you're waving your hand. You have a question?
Yeah, I'm curious, Mike. We talk about ratings and obviously investors on the street, hedge funds, money managers and stuff. What's your estimate of the investor population that that you're targeting? What's the percentage out there that pay attention to ratings, and seems like there could be a lot of room for growth for you?
I think so too, Joel. I think that's a great question. And one of the things that we're really trying to innovate around is the ability to provide that in a reliable, trustworthy way that's independent from Wall Street. There isn't a lot around rating not only individual stocks and ETFs, but the distribution side of these things. And so you got 50 million brokerage accounts roughly in the U.S. And I think, whether you are an independent investor or you are a professional on the manufacturing side or the distribution side, looking at that rating as part of research, or even at the time when you're pulling the trigger on making a trade, whether that's on the buy side or on the sell side, I think it can be extremely powerful, and that's what we're betting on. If you think about ratings and reviews and how they've completely transformed just about every single industry, I think it's a requirement for all industries going forward, and that's what we're aiming at.
That's a great point, Joel, because we talk about ratings on this show all the time. It's one of the key catalysts in pre-market, and so
cannot ignore it.
Yeah.
You're not going to make money. Goldman Sachs downgrades a stock. If you're short, great, but it's important to look at it not only from the short-term perspective, but some of these guys are pretty darn good, and Mike does a great job of tracking them.
Yep. So and that's our spiel about ratings. So Mike, thanks a lot for hopping on today. We appreciate it, and definitely will. I mean, I'm on your site pretty much every day or every other day, and I'm gonna keep an eye out because I think it's pretty great, and I think you got some good stuff going. So I hope to see you at the awards in May, and for all you listeners in the chat, that's Vetter VETR.com. Mike, thanks a lot for hopping on today, and we'll talk to you again soon.
Thanks for having me on. I'll see you at the awards.
All right. And that right there is Mike Vienne, the CEO of Vetter, and it's VETR.com. That's our show for the day, folks. Hope you enjoyed it. Tomorrow we got a couple of guests for you. We're going to have, I think, one live interview and one recorded. We're going to have our guest tomorrow that's live is Blaine Reinkensmeyer. He runs StockTraders.com. He actually has like 5 sites. That's just one of them. But he's a good guy. He knows our CEO Jason. Speaking of Jason, our CEO, today's his birthday. So happy birthday, Jason Raznick. And I don't think he'll be in today. I don't even think he's working. I hope he's not working today, but no one came here. Probably is. So that's our show for the day. Hope you enjoyed it, everyone. We'll be back with you folks on Wednesday.
Whether you're a short-term swing trader or a long-term investor, you need to check out Thinkorswim, brought to you by TD Ameritrade. There's a reason why Thinkorswim has been named the #1 trading platform, because it has it all. With Thinkorswim, you can trade stocks, options, futures, forex, and virtually every other type of order. Get notifications on mobile devices and interact with other traders in chat rooms. You can also use technical indicators and see the latest investing and trading education in Think Money magazine. If you want to keep up with the markets, you need Thinkorswim. To experience everything Thinkorswim has to offer, open a TD Ameritrade account today. Thinkorswim, the online trading platform for traders and investors. TD Ameritrade, member SIPC. All investing involves risks.